Well, hello everyone, and thank you for joining us on this week Real Estate Roundtable. I am so excited to be here this week with my friend from high school. Wow, it's been many, many years going back to high school, and she is now in the title business, and she's here to discuss with us today the importance of title insurance. Whenever you're buying a home, you're always having your attorney order a title report and they're reviewing it. But do you really understand why they're doing what they're doing and what it means? And really, should you get title insurance or should you not? There's a lot to discuss today. If you have questions and you're on the webinar, please type them in the Q&A. And if you're joining us on Facebook, thank you. Please leave your questions and we'll try to get to as many of them as possible. But to start us off, I am going to give Kelly an opportunity to introduce herself and tell you a little bit more about her company. Kelly?
Hi, how you doing? How is everyone today during this pandemic time? Okay, so my name is Kelly Grant, and I am the manager at City Abstract and CA Land Abstract. We're located in South Richmond Hill, which is off Liberty Avenue. So basically, that's it for me, my business. We have a lot of employees here. As you know, as Kaylin said, we go all the way back, history, high school. Now we're in the States, doing what we do best. So here goes. We'll start off with title and why you need title. But first, we'll say what is title insurance, basically. So title insurance, basically, it's an insurance against any loss that can result in any defect of title. So it is very important to obtain title insurance. Now, what does that include? That includes liens against the property, against the owner, against the buyers, taxes, any assessments regards to the property. So that's what's included in the title search.
Okay, well, thank you, Kelly. But you're talking about liens and taxes and search, but I want you to really break it down for our viewers. Why is that important? Why is it important if there's a lien on the property? Why is it important if there are taxes owed? I mean, why is that important? Does it matter? They're not the one who owes it. They're not the one who has a lien.
Right. So where we step in is we protecting the buyers from any unknown risk. So that's where we come in to give that kind of policy, that kind of coverage, that kind of comfort to know that you're buying this property free and clear of any liens. So any liens, judgments, mortgages, anything that is owed on the property, the seller is basically responsible in clearing those liens. So the buyer can have good profit and marketable title.
Okay, so what I hear you saying then is you need to make sure whatever is owed by the seller is taken care of before you purchase the property.
Correct.
And that's important because if you purchase the property and it has these liens, then later on they could come against you. You could now be left to pay for, whether it's a judgment or taxes or whatever it is. And so you would be left to pay whatever was owed by the seller if you did not obtain a clear title.
Correct.
Also heard you mention marketable. Let's say, what are we talking about when we're saying marketable title?
Well, we're saying marketable, meaning that, okay, you're buying this house, you decide to sell it down the line. You want to make sure when you're selling this that your new buyer, I would say, would be like, okay, this property is really on the market and it's valuable and it's worth it. So you want to make sure you're basically covered in all areas. Now with title insurance, if you have any issues on the seller and you have title insurance, then you're basically covered. No one else can come to claim this property. That's why we do the search to make sure that everything is done properly, and everything is verified.
So while we're talking about marketable title, we're basically saying to you, if you are considering selling this property at some point later on, then you need a title that you will be able to transfer, that someone will be willing to pay for. Because if it's incumbent and they have all these restrictions on it, then someone might not be willing to purchase it at that time. Is that what I hear you saying?
Yes, ma'am.
Yeah, okay,
Yes.
sounds good. But you also mentioned, let's talk about, so we've been talking about having the insurance. So the insurance will be guarding the buyer against future risk. Is that correct?
Correct. Yes.
Okay. So let's talk now about the title report, because typically the attorney, they're going to order this title report and they're going to review it. What is it that's included in a title report? What is it that you're looking at when you're doing that title search?
Okay, so for the report, it's actually a compilation of all the legal documents that's pulled in the abstract. So we compile all of that in an actual report that where we send out to the mortgage brokers, or we'll send out to the seller's attorney or the buyer's attorney. So with respect to the report, when we order the abstract, when we do the search and it comes back, then we'll do all of that in a full report to send out to everyone, basically breaking it down.
Tell me a little bit about some of the things that you're looking for, that where you're breaking it down. What are some of the things that's included in that report? The boundaries, for example,
Right.
What are the boundaries? What exactly is your property? Can you tell me a little bit more about what, that report includes?
Okay, so we go back 60 years. So we go back to 60 years of the chain. We include, the rule of thumb, although we go back 60 years, the report always go back to the last deed in the report. So in respect to some of the lenders, they would require at least a 24-month chain. So say if you bought this property in early 2019, we normally would put the last deed in the report. So being that the rule of thumb, the lenders always would require at least the 24-month chain. So then we would have to insert the other deed prior to 2019. So the seller bought in 2019, that's not even 12 months. So we have to insert the other deed prior to the 2019 deed. Then we would include any easements that are against the property, any restrictions that is against the property, mortgages that are open, the taxes that are open, any tax liens that can result into foreclosure actions. And also we'll do the municipal searches that's included in the title report. Now the municipal searches include your certificate of occupancy. The certificate of occupancy basically tells you what type of property it is, what legal type property you're purchasing. So if it's a 1-family, or if it's a 2-family, or it's a mixed-use commercial, whatever it is, that's what your CO, in terms, we call it CO, that's what's included. So we'll have that, we'll have the tax search, we'll have emergency repairs, a whole bunch of stuff that is there. We have street report, we have highway search, which is if you have a sidewalk lien. The emergency repairs, basically, if you have fire, it all depends. It's different areas that's considered to be emergency repairs. And you'll have environmental control board tickets, otherwise known as ECB tickets. Those are garbage tickets that they'll issue to the property. Those are also liens that would have to be paid at closing. The water, we also do the water search. Basically everything we include in that title report.
that title report. And where are you getting all this information from? Because there seems to be so much information that's going into one single report. And we're talking about water, we're talking about tax, we're talking about garbage, we're talking about, you know, sidewalk liens. And a lot of times when you're purchasing a property, you're not thinking about those things. You are thinking, I like this home. This is the home of my dream, and this is the home that I am going to purchase, right? But now you're telling me, oh, before, you know, you're in contact with the lender and they want to see 24 months of a chain. And let's just break down what a chain is for our viewers, exactly what you're talking about when you're talking about the chain. What is it that you're looking at?
So the chain is basically the link. So you'll go down the link of the property, all the transfers that has taken place throughout the history of the property. Now with New York City, and also New York State, some documents are not viewable online, so you have to go all the way into the book. And you know, those are really old because they're not available online. So you got to go into the archives, you got to go in, you got to go dig up all those stuff because you have to let everyone know, hey, you have this here, this is what is going on with the property, and you need to know what you're doing. So that's basically what the chain is. And it's the link connecting all those deeds, all those transfers on the property.
Okay, so pretty much it is the prior owners, like
Yes.
all the prior owners before the person who currently owns it, and you're tracing that back at a minimum 2 years for a mortgage company, but you as a title company typically go back 60 years to see who have owned this and who has been who has it transferred to. So it transferred to John in 1982, then Mary in 1987, then James in 1999, and then, you know, Jim in 2007, and now you're about to sell the property again. Is that a fair depiction of what it is?
Yes.
Okay, great. And so you're doing all of this, right? And sometimes our buyers, they just want to move in. They are ready to go. What's the turnaround time for producing a title report?
The average turnaround time is 2 weeks at least. Every abstract, every search is different. Some can be very easy, some can be very hard. If you're buying a condo, which is a condominium, there's a lot of more restrictions with the condominiums. If you're doing a co-op search, which really don't require title insurance, but we just do the search, those are different. But
why the co-op does not require a title insurance, and the condo requires one and takes a longer time?
Yeah, so the co-op is basically, there's no deed or title being transferred. In a co-op, it's shares. So you would actually get a certificate of the shares in a co-op. So for the co-ops, you don't need title insurance. You only do the search, you know, to let them know what's going on with that actual unit. But for a co-op, you don't need title insurance because it's only issued via shares. And then with the condo, the condominium is basically similar to a house, but it's more so in a development of other units. So with the condominium, they treat it like a house, hence you can obtain title insurance. Now, if you're getting a mortgage, because recently, I would say a few years back, they kind of changed the laws a little bit with the purchaser deciding to take owner's insurance, which is also called fee insurance, which is also called your fee policy, basically telling you that you are the owner of this property. So you actually get your fee policy or your alter policy, right? So that would basically tell you, hey, I'm the owner. No one can come and tell you, oh, well, I'm the owner, because you actually got your certificate, you closed on this property. So we verified everyone, all sellers, all prior owners, any deceased person, any siblings down the line, surrogate search. So we do the whole 9 yards. So some reports take a little longer time than some, but the average turnaround, at least 2 weeks.
And how long is, so would you advise our viewers, those who are thinking of purchasing a home, it's not required, would you advise them to get title insurance?
I will definitely advise anyone buying a home that you must obtain that insurance, because basically you're being covered of any defects or any ownership loss. Because what if now you buy this property and you never took title insurance, and then a year later someone come to knock on your door and say, hey, I'm the owner, what you do then? Now that becomes a lawsuit for that person, because they don't know what they did. Then you tied up in court, and you're gonna have to do all of that. Meanwhile, if you had title insurance, unfortunately that would be our problem now.
So you as the title company would step in, and the buyer would just sit back and you take care of everything.
Yes.
Okay, so how long is it good for this title insurance?
The title is good until it remains in effect as long as you have an interest in the property. So say you're buying this property, whether you have a lot of money saved or you inherit some form of money, or you're a millionaire or you're rich and you have all this money to just buy a house in terms all cash. Okay, I can buy this home all cash with no bank, no lender involved, right? Sometimes you don't want to pay the money for the insurance. So you decide that, hey, let me just buy this house from Kaylin. I don't want to pay for no insurance. I don't have this money. So let me just buy this from Kaylin. Do you know if Kaylin is the actual owner? Because a lot of fraud, a lot of this is happening. It's going around, people claiming to be who they are and they're not. Girl, I can go on and on to tell you the stories, that I've witnessed, that I've seen. I didn't even know people can actually do those things, that's jail time situation. But say you now are buying this property with a lender. Well, the lender must be covered. That's the first thing. So even if you're telling yourself, well, I don't want to pay for the fee insurance, which is also known as the owner's insurance, but the lender said, hey, I'm lending this money. I want to make sure that I am in first position lender on this property. So I need coverage. I have to be covered. I can't just lend you this money to go buy this house and we're all clueless as to who's the real owner, and I'm lending you 400,000 or I'm lending you 500,000. So once a lender is involved, coverage is a must for the lender. You as the buyer can also decide that, hey, I still don't want to pay for my side of the insurance costs, which is the fee insurance. So the fee insurance cost is a contribution on the buyer, and the lender's portion is basically the lender's coverage, but the buyer is also responsible to make that payment. And it's a one-time payment when you close.
Okay, so you're saying the insurance, it's not a monthly payment, because we're all used to paying insurance, so we paid year after year after year and month after month. And you're saying that title insurance is a one-time payment?
Yes, that's a one-time payment.
And who pays this?
So we pay it when you close. Well, I would say no, not we pay it. The buyer would pay that when it's time for closing. So closing is where, okay, you get your loan approved, The sellers cleared their issues, whatever issues they had on title that they had to take care of before we go to closing. So we don't go to closing until the file is cleared, which is a title report. It has to be clear of all liens. So if the seller have this 100,000 judgment, they owe, whether say Capital One or they owe a car company this money and it shows up on title, that's 100,000. They have to make sure that is taken care of. Either we get a payoff or you already paid it off and we have to get a satisfaction. So all liens that are open when we do the search must be taken care of before we go to closing.
Okay. And, you know, we've been talking a lot about the seller and doing research on our sellers, but am I correct that you also do research on the buyers?
Correct.
Okay.
We have to
Why are
research.
you researching the buyers if they are just taking possession? They're not the one that's claiming to own this property as yet.
Yes, but guess what? The buyer have a history of themselves, correct?
There is a history, but how, you know, why is it important in this transaction for us to look at the buyer?
Well, in any case, in the title respect, when it comes to the buyer, yes, we are a little concerned about the buyer's judgments or liens, because in our world, we say, okay, the buyer's buying this property. He's going to own it, right? Now, he owns, or he have another house. He owns all these debts, all these credit cards. Now, like I said before, once a lender is involved, that they're lending this buyer money, they don't want anything at all on that property, whether it's against the buyer or it's against the seller. So as title company, sometimes we don't make it a big deal, in other words, but the bank make a bigger deal because they want free and clear title. So in order for them to have free and clear title, the judgments or the liens against the buyer must also be taken care of.
Okay, so this is where perhaps the buyer now gets the new property, and someone will come and put a lien on the new property, and the bank is saying, we don't want to have that, you know, as soon as you own this, someone else coming to say we have a claim against it because you're now the new owner. Is that pretty much what you're guarding against in that respect?
Technically, no, because once you close, so let's fast forward to closing. So you go to closing, and before the closing date, we do, or actually on the closing date, we do what is called a continuation. We have a title continuation and we have a tax continuation. So the tax continuation is basically the continuation of the tax search that we did. The title continuation is basically the continuation of the title that we did. So we ran the title 2 months ago. Anything can happen from 2 months ago to current. So we have to do that update the day of the closing. Sometimes we do it the day before, but it's mandatory that we do it the day of to make sure nothing show up the last minute. Because if we close and that judgment was filed before we closed and we missed it, that's a neglect on our part. And that's where you get title insurance coverage, because now we screwed up.
Right. So, and that's my point exactly, you know, so they want to make sure before the closing, so they won't have to be able to come back later on and say, I have some other interest towards that. So it will be done. That's the reason for doing it on the buyer as well.
Yes.
Okay. So let's talk, you were talking a little bit about closing. Let's talk about that. What exactly is the title agent role at closing? What are you doing?
Well, what we do now is everyone is ready to close. The bank approved the purchaser, their file is cleared, seller took care of their issues. Now there's no problem to go to closing. So the bank said, hey, we're ready to close. Let's schedule. Let's get this wrapped up. So now we schedule the closing. Basically, with everyone agreed, we don't have no special time because we always have someone ready to close. So they be like, okay, so let's schedule the closing for 3 o'clock or whatever time. So now I have to designate my title closer to go to that closing to represent the company. And what that title closer do is they have to review all documents, which include the deed, which is the transfer of the title and the ownership from the seller to the buyer, along with the mortgage documents. They have to sign affidavits, review the IDs for the buyer and the seller, verify the payoffs if there's a payoff. If there's a mortgage on the property that the seller have, then the title closer have to call the bank, verify, hey, this is the amount, I have the payoff letter here, verifying I'm paying you off. This is the amount that's due. We have to send that payoff, whether by FedEx or we wire that funds. So that's the basic role of the title closer. She have to review everything, make sure everything is in place. Then when she get to the office, then that's where we break the file down, do all the recordings. If we have open water, open taxes, then we pay those. We pick those up at closing and we pay whatever lien is on the property. We collect at closing and we pay if they're not paid in advance.
So New York is what we call an attorney state. So there's usually an attorney in the room, more than one attorney in the room. So if the closer is reviewing all of these documents, what is the role? What would you say the attorney would be doing at that time? And how is that different from what the closer does?
So the attorney basically do the explanation of the documents. They advise their clients, hey, this is the loan document. You're getting a loan, you're borrowing $500,000 from Wells Fargo. Your monthly payment will be XYZ. You pay every month on the 1st. It will be taken out of your account or you will be paying by check. You know, those are the documents that the attorneys review. Then the documents that we as title produce, the attorney also, you know, explain those to the clients as well, so they know what they're signing.
Okay, but you as the closer now, you're coming in, you have reviewed, make sure that all the transfers are happening, picking up that, you know, check for the bank, if the bank needs a check, for the
Right.
tax liens that
Right.
needs to be paid, for the water that needs to be paid off. So any and everything that remains to be paid will be paid from the proceeds at closing, and it's now your job to make sure that that's all itemized on the closing, and you are taking that back to your company and recorded and paying those off.
Yes.
Okay.
And then at that point, then we would now record these documents. So the deed will be recorded and the mortgage document will be recorded on the property, and those have to be done, you know, within a certain time frame. So we don't have any kind of exposure to liabilities. And the underwriters, you know, they they make sure, you know, we're on the straight and narrow and make sure all of that is done, you know, in a timely manner. So
how soon do you typically record the deed? So if I purchase a property today, if somebody looks it up tomorrow, will they see my name on it because now I've taken possession of it?
no, you won't. The first thing is we have to deposit those checks, right? So you know checks take at least 3 days, you know, to 5 days to clear. So we would say within 15 days, but the tops is at least 30 days because sometimes you have difficulties with the city or with the state, which is, you know, Nassau, Suffolk, Westchester, that side we consider as the state. And then the 5 boroughs we consider as the city. So when we do closings, we differentiate whether we're doing state or we're doing city.
I see. And so it could take up to 30 days. But I have received the keys to the house already. Can you come back and take it from me after 30, you know, like after a day or two? What's going to happen? Am I not the owner of the home?
Exactly. You are the owner of the home. You purchase insurance. So you are covered, my dear.
But okay, so let's play devil's advocate. So what if I am a homeowner who decides that, you know what, yes, the bank said that they need to be covered, but I don't want to get the title insurance. You had ordered a report, but we see the report, but I don't want to continue with insurance. What happens to me then?
So, okay, you don't have to because you don't have the money to do it, right? But if you have an attorney, most attorneys, I would say 99% of the attorneys, they advise their client it's best. We understand it might be a little bit more, a little maybe expensive, but to me, it's not expensive and it's really worth it. You don't want to take that risk, leaving your property open with all these risks and defects and people coming to claim that they are the owners. I've seen it. So I know what it is.
So you say it might be a little expensive. If we're having a $500,000 home or $1 million home, how much are we're talking about for a home that's 500,000 versus a home that's $1 million? I know it's going to vary, but approximately how much would you say a buyer would have to pay for that insurance?
Okay, so let's say they're buying all cash. So buying all cash at say 500,000, you're paying the title fees, the searches that we do. If you decide to get the insurance, you'd have to pay the insurance coverage, which is the bulk of the title money. So the bulk of the title money is the insurance money. I am not the one that gets all that money. The money have to be submitted on a monthly basis to the underwriter. They're the one that gets the money. So we're just doing the work and we're basically the agent of the underwriter. So they submit that. I would say you don't get insurance. You're looking at least $3,000 thereabout with the searches. If you're getting insurance, it probably will run you in that range. That's just a regular all cash, no loan including, no payments, no escrows. That's just a straight up cost.
Okay. And it would be a little more if you have a mortgage company, you're paying mortgage and yourself, correct?
Right. So if there's a loan involved, then you'd have to pay mortgage tax. And that money goes directly to the city. We pick it up, but we have to submit that money along with the mortgage document that we're recording. So we technically don't actually get that money for ourselves. So on my title bill, the fees are broken down. So you'll see what will cost you the mortgage tax. And with the mortgage tax, it differs for a certain amount of money. So over 500,000, you pay a different amount for mortgage tax. Under 500,000, you pay a different amount. If it's a 1 to 3 family, it's a different amount. If it's over a 3 family, it's a different amount. If it's a commercial property, so all these, you got to factor in. But for regular home, 1 to 3 families, the lenders basically contribute to a quarter of that money, which is a 0.25%. So let's just do a scenario. So under 500,000 for a 1 to 3 family, it's a total of 2.05% for mortgage tax. So out of the 2.05, the bank or the lender, they contribute that 0.25. So the borrower basically pays 1.8. So if you have a loan of 500,000, the borrower's contribution is 1.8%, and the lender pays 0.25%, which is a total of 2.05% that the city gets.
All right. Any other tips for us to look out for when it comes to title insurance or, just closing and buying a property, and what should we take into consideration?
Kaylin, this business is so crazy. It's like there's so many scenarios I can touch on. There's so many things I can explain, different points, different scenarios. You have investors that are buying. Sometimes they don't want to pay the liens, because they plan to turn it over. Every situation is different. But one thing I didn't mention and I didn't say is when you're buying the home, the seller, if it's not stipulated in the contract of sale, the seller is the one that's responsible to pay the transfer tax on that deed. So if you're buying the property or you're buying the house for 400,000, then the seller is the one that pays the transfer tax on 400,000. The buyer don't pay the transfer taxes. That's the seller's responsibility. But I see in a lot of cases where it's like new construction, it's agreed upon with the buyer and the seller's attorney that the buyer will pay the transfer tax. Sometimes they argue about it, but in most of those cases, that's how it works. But normally, it's the seller's responsibility.
Absolutely, that is correct. The transfer tax is typically the seller paying, and then the mortgage and the mansion taxes are paid by the buyer. Well, I really want to say thank you so much for joining us today. It's been a pleasure having you, listening to you, just learning the importance of really, getting title insurance. And I can't emphasize how important that is. If you are a purchaser and you're buying a home, that is essential. Now, I don't see any more questions in our chat box. If you have a question, please let us know. And if not, we're gonna just thank Callie for being here with us today. And that's it. So thank you so much. Once again, thank you for joining us on Real Estate Roundtable. And until next time, next Tuesday to be exact, at 4 p.m., have a great day. Talk to you soon.
Okay. Okay. Bye.